I think while yes, there are big catalysts on the come for us with federal legalization. Now, I'd argue, look, we're guiding towards mid 30% growth this year. I'd say we're kind of making the catalyst happen on our own, even absent federal legalization. And I think when you look at sort of our profile of revenue growth and profitability and sort of the size of the TAM and the fact that there's all these net new markets opening that didn't exist before, I kind of chuckle and say I challenge folks to show me another high growth software company that has all those things going for it.
Welcome to Seeking Alpha's CEO interviews, informed conversations with the best and brightest CEOs in the publicly traded markets. Quality of leadership is a decisive factor in stock performance. Our show provides intimate and in-depth investing discussions with industry leaders across all sectors of the marketplace. We publish excerpts on social media platforms and the full conversations on seekingalpha.com or on our highly rated Seeking Alpha mobile app under CEO interviews.
Welcome to Seeking Alpha. I'm your host, Jesse Redmond. Today, I'm joined by Chris Beals, CEO of Weedmaps. Chris, thanks for joining us.
Hey, thanks for having me.
So let's start out with an introduction. For people that aren't familiar with Weedmaps, Chris, how would you describe the business?
Yeah, so it's sort of a Amazon meets Shopify, but for the cannabis sector. So on one side, we are the largest marketplace for cannabis. We are a software company, so we don't touch the plant, but we provide a virtual marketplace for cannabis retailers and brands, and in some states, doctors, to effectively showcase their store, their inventory, their real-time inventory, often based on their point of sale system data, and then sort of attract shoppers based on deals or whatever else the shoppers are looking for, and then get them to check out and purchase. But along with that, we then have what we call WM Business, which is a suite of power tools that go along with the marketplace. So think digital e-commerce that leverages our data assets. So that's where the Shopify type analogy comes in. We have a CRM solution. We have a delivery logistics software, deal with the fact that once a delivery order comes in, many states require there to be things like real-time GPS tracking of drivers, special workflows to update state track and trace systems, things like that. And then other pieces of software like analytics. And then we have a similar set of offerings for the brand side of the house, which is one of the fastest growing segments in the cannabis sector.
And where's the company based, Chris?
So we're based in Irvine, California. A lot of people think we're sort of, they're relatively new to hearing about us, but we're actually a 14-year-old company. And so we were founded down in Southern California. We call that home. At this point, we're over 700 employees, but we are a California company.
Great. And there's a term in our business that we hear sometimes called the pick and shovel story. And the pick and shovel story goes something like during the gold rush, it wasn't necessarily the miners that got rich. It was the people that were providing ancillary tools like the picks and the shovels that are the ones that really capitalize on the gold rush. Can you talk a little bit about that analogy and how it fits into the Weedmap story?
Yeah, I think at the end of the day, we are, if you want to use that pick and shovel type analogy, we're the most sort of broad, diversified way to play the cannabis sector. We're present in all 37 states that have cannabis legalization. We're present in all the international jurisdictions that have legalized cannabis. And we provide these sort of essential services. We are the way in which the primary platform that most retailers and brands rely on to reach consumers, but more importantly, to be able to compliantly receive and fulfill transactions. And that part is really tough. It's not easy to do. And the other part of that is with that business set of offerings, there are businesses that have an incredibly high affinity for things like our CRM solution or the e-com embedder that maybe aren't spending quite as much on the marketplace side or trying to advertise and appear more prominently in the marketplace. And that's fine. There's sort of a natural push-pull kind of symbiotic relationship between the two parts of the business. I think the part of it I push back on, or the one maybe adjustment to that is, during my time as CEO, I've really been trying to push us to be extremely customer focused, customer obsessed in everything that we do, and make sure that we're delivering undeniable amounts of value to businesses for the price point. And I think that structurally is just something very important as we go forward, because I think on like sort of that gold rush analogy, where I think a lot of times life wasn't so great for the miners, I think there's a lot of room for incredible opportunity for cannabis business owners, especially as these new states open, but it's going to be reliant on being able to cost effectively reach not just anybody, but actual high frequency cannabis consumers, and being able to deal with this crippling level of sort of cannabis regulation and sort of legislative nuance to how you have to run your business in a cost-effective manner, because the penalty, and we see this in more mature states for not being compliant, is you lose your license, and that's sort of the worst case scenario.
And one of the other things I think differentiates weed maps and maybe most of the ancillaries from what we'll call the plant touching stocks is where they're listed and how accessible they are. And that's one of just the huge challenges for these MSOs, is that because they're plant touching, because cannabis is federally illegal, they can't list on these big exchanges like the NASDAQ or the NYSE. They're relocated to Canada and then over the counter listings. And even when they have great results, sometimes they don't get the attention of the other stocks that are listed on things like the NASDAQ, just because the institutions and a lot of investors, for example, if you're on Robinhood, you can access weed maps super easily. You could not access somebody like, Curaleaf, because they're not available on the Robinhood platform. Just curious if you had any thoughts about, that structural advantage, I guess I'll call it a structural advantage for investors, and kind of how that opens up the universe for people to access cannabis on these accessible platforms, and maybe an easier manner than trying to get into some of the OTC plant touching stuff.
Yeah, look, I mean, I think at the end of the day, and maybe this is a good segue to later talking a little bit about what life looks like on the other side of federal legalization, and the fact that we can't sort of charge fees or provide payment rails for cannabis transactions. But sticking to your core point, look, we're publicly listed on NASDAQ. We're a tech, software, and data company, which in and of itself, I think, we just have a different level of scalability, a different level of efficiency in our ability to generate incremental revenue with our investments. But yeah, and so being NASDAQ listed, I think, does bring an added degree of visibility, an added degree of accessibility. But at the end of the day, I think the thing that's really important is, there's still always going to be a little bit of a drag on cannabis stocks until we sort of see some of the stigma around cannabis decline. I think when you look at where we're trading right now, at currently just over $8, compared to our revenue, and looking at our revenue multiples versus traditional SaaS or marketplace comps, we're trading extremely heavy discount, one that I think is sort of unnaturally low. But I think part of that is because of that sort of cannabis overhang, despite the fact that we're NASDAQ listed, despite the fact that we've put up pretty gaudy revenue growth. And I think one of the ways that we deal with that, or part of our core ethos, is profitability. We're an unusual for a fast growth tech company that we've been profitable for all of our full 13 years. And part of that is because as a cannabis business, and a business that sought to grow and scale within the sector, being frugal, being able to rely on the capital you raise is a core competency. And I think so. While I think the NASDAQ angle is great, and I think undeniably, I think some degree of a seal of approval for sort of how we position ourselves from a compliance viewpoint and that sort of thing, I think in our core ethos, we're very much sort of a company that looks to maintain profitability while scaling quickly.
And do you sense when you're talking to investors that more of your investor base are people that are excited about the technology component, or people that are excited about the cannabis component and the potential growth there as new states come online? Or is there a big group of people that are sophisticated enough to understand that intersection and appreciate both components? Because I think both are valuable.
Yeah, I think both are valuable. I think, look, one of the reasons when we went out, one of the biggest things we ran into was, we were going and talking to a lot of very sophisticated SaaS marketplace, e-commerce technology type institutional investor groups. And one of the things we realized quickly is, for most of the funds we were talking to, we would be their first sort of cannabis related investment. And so we had to spend an inordinate amount of time educating them on the raw cannabis sector, why there's such high barriers to entry for folks, why sort of it is structurally going to be impossible for an Amazon or a Walmart to come in. The fact that cannabis has this incredibly wide range of clinical effects, so trying to analogize it to alcohol was incorrect. And once we educated them on that, I was really proud of the fact that when you look at our investor base, we're generally, for many of those funds, their first sort of cannabis investment, because they're traditional way kind of software and technology funds. And so I think we've done a really good job of getting the seal of approval from people who understand cannabis and the seal of approval from people who understand technology and sort of marrying the two. But that being said, I think there are other folks coming at it from purely the cannabis lens, and there's great investment groups and institutional groups out there that really deeply intrinsically understand the cannabis sector and understand kind of the critical role our marketplace and increasingly our SaaS software plays within that ecosystem. And they can come at it from that angle. And for some of them, we may be their first sort of regular way kind of scaled technology investment. And so, but either way, I think very much we're targeting kind of the overlap of that Venn diagram between technology and cannabis. And for folks in both of those kind of circles, we're often their first investment kind of in the other half of the sphere.
Right, right. And one of the reasons I was really excited to talk to you is that I used to be a Weedmaps client. In 2016, I started a California collective and ran that for a couple of years. And during that period, Weedmaps was an absolutely invaluable tool. The biggest benefit for us back then, and I know the platform has evolved, so I don't want to frame it in a limiting manner, but the basic thing that helped us so much were two things. One was discovery. And in our region that we operated in, I think there were 17 different collectives. And depending on what you paid, you could be listed anywhere from 1 to 17. And it provided us a great opportunity just to get on people's initial radars. And honestly, without Weedmaps during that period, I don't think we could have succeeded. Moving on from there, the other great feature that was super helpful to us is that deals page. And for people that don't know, on the Weedmaps website, there's a deals section which is an additional, I don't know, few $100 depending on where you are, where you can advertise specials, 20% off on Flower Friday, 15% off on Waxy Wednesday, and that too was just a great way for discovery and getting the word out. So with that framework, I guess my question is, can you share a bit about how Weedmaps helps dispensaries get discovered, and talk about is that deals page still something that's so valuable?
Yeah, actually, Jesse, I was really excited to kind of come on and talk with you because I think you having the lens and the framework of, the Prop 215 collective or cooperative area versus now, I think is a really interesting, I think kind of journey, and I think highlights a lot of the value prop, because I think still that discovery function, like when you look at, like, one of the hardest things for cannabis businesses is how do I reach actual high frequency cannabis consumers? The high frequency being the key part of that, because those are the people who come in, will fill up their bag with cannabis products, and then will come back pretty frequently. Like sort of a lot of the death knell of some of these sort of flashier cannabis names has been they have a bunch of tourists who would come in and buy like one pre-roll and leave, and like the time and labor you spent to get them to walk out the door with $30 worth of cannabis was a net losing transaction. And so the interesting thing about the marketplace is the people who are looking and shopping on there aren't just anyone. 94% of our users report consuming cannabis monthly. In fact, over 70% report consuming cannabis daily. So these are ultra high value folks. But from 2016 till now, the other big thing is we've invested incredibly heavily in integrations and connections with point of sale systems, because the number of SKUs that most retailers are carrying and the number of those SKUs that are tied to brands where they want to get brand data has exploded. So the average retailer has over 400 SKUs right now, and you have dozens of SKUs changing during the course of any given business day. And so one of the things we immediately started realizing was, unless these menus are real time, they're really accurate, unless they're discoverable by someone who's looking through the lens of, I'm interested in a brand, I'm interested in high THC for the dollar, that sort of thing, we weren't going to effectively route consumers to where they needed to go. And so I think the other big part of the value prop is actually enabling retailers to take their, very sort of non-presentable point of sale data and move it into a digital e-commerce service. And then we have a bunch of sort of automated processes that clean it, match it with brand data and all that, to make it actually something that's shoppable and transactable for a consumer. And then if they want to put that on their website with our WM Store e-com embed, they can. But that real-time sense of inventory, frankly, doesn't exist in a lot of industries outside of cannabis. The alcohol delivery space has struggled with it, that sort of thing. Deals is a huge component. We launched a really exciting, because the average cannabis consumer, we know from survey work, is way more price conscious for their income level with respect to their cannabis shopping than they are with respect to other goods. And so we launched some really cool work last year on self-service deals, on sort of discoverability of deals. So if a retailer says it's buy one, get one on a vape pen brand, we can auto tag that based on their real-time list of vape SKUs, so that if you're looking at the brand page for one of the vapes that that retailer carries, you see that there's a buy one, get one with respect to that brand. And so dynamic syndication of those deals to make them more discoverable. But yeah, we saw over a 55% increase in deals that were generated in the second half of last year with some of the things that we launched. But we also saw, I don't want to misquote the number, but double-digit percentage increase in deal claims and conversion, with people actually shopping with those deals just in the back half of the year. And so deals is a huge value prop, and something that we're doing. We have a bunch of cool skunkworks projects on the come in terms of sort of increasing the discoverability, interactability, traceability, trackability of deals going forward. And then separately, I've kind of given short shrift to the WM business side, but yeah, I mean, look, we're launching a cool functionality with our CRM solution, where for the first time businesses, and that's brands and retailers, will be able to use the CRM to message their followers on weed maps directly within the app. Yeah, and so that'll be launching into beta any day now.
Yeah, that's huge, because it's getting increasingly more difficult even to use SMS programs that involve cannabis words, is my understanding. So you're relegated a bit to emails, right, which isn't necessarily the best way to be doing that. While we're on this topic, is that through the Sprout acquisition from last year that you're getting some of these synergies?
Yeah, so that was, absolutely. I glossed over that. So since we went public in the midway through last year, we acquired Sprout, which is the CRM solution, which we've folded in and been augmenting. We acquired Concurrent, which is a kind of power integrations and connectors tool that's brings a lot of value to the multi-state operators, the MSOs, and others that have these scaled operations where they need to stitch their inventory or POS or other systems together. Canvea, which is a delivery logistics software suite, which actually replaced an in-house delivery logistics suite that we had. And so we've really been kind of putting our foot on the gas in terms of stitching those integrations into our ecosystem, but then also making them sort of seamlessly work with the other parts of the platform.
And one of the things on the negative side, I would say, Chris, in my experience with Weed Maps, is that as our business evolved, so let's say we got our first 500, we got our first 1,000, we call them patients back in the day during the collective era, or during the medical era, I found that the utility or value of Weed Maps diminished as my business grew, meaning that once we had gotten most of the customers we would get in that area, it wasn't as critical. And I found that some people, even at that point, decided, well, I'll just migrate to my own website and save that additional expense of Weed Maps. Now, back then, I think there were less additional features. Like I talked about, discovery and deals were the big ones that drove most people then. Can you talk a little bit about how you're adding value to these more mature businesses these days?
Yeah, so one of the things that a lot of folks misunderstood was how sticky users coming to the marketplace are. So a consumer who comes to the marketplace overwhelmingly is going to want to continue to shop in that marketplace setting, especially as we added, and this changed since 2016, that e-commerce and online ordering functionality, the ability to sort of get bi-directional messaging from the business once your order was placed. But the other thing is, a lot of times those consumers are shopping through lenses where they're comparing retailers. Every single time they come on their shopping journey, they're looking for who has the best deal, who has the highest THC flower, who has that hard to find beverage that I really liked when I tried it. And so they want to continuously come back to the marketplace because they're trying to discover and compare. The thing that was interesting is when you look across our platform, on average for businesses, you can be on the platform and pay a very low monthly fee, and that's it. If you want to appear more prominently in the platform, to appear more in front of more consumer eyeballs, you can advertise within that marketplace platform. And from a efficiency of ad spend, there's nothing that comes close. We're averaging about a 10 times ROAS, or return on ad spend, for dollars that cannabis retailers and brands spend within the platform. So the simplest way of putting that is, for $1 they put in one side, they get $10 out the other side. I would challenge anyone to show me another sort of digital avenue that does that. But really interesting example. there was an acquisition between where a pretty scaled operator, I'll keep it sort of general to not embarrass anyone, acquired another business, another sort of chain of cannabis dispensaries, and this is at the end of this last year. And that business, sort of in wrapping up their affairs, basically stopped paying their Weed Maps bill and came off the Weed Maps platform. And the CEO of the acquiring company shot me a line on like a Wednesday or a Thursday, and he forwarded the whole chain from like his retail operations manager, and they had this, several dozen stores, and in the combined entity, and the retail manager partway down the chain basically said, we need to get back on Weed Maps as quickly as possible. This last Tuesday, our sales were down 66% or 64% from the Tuesday before. And the guy wrote to me, listen, like we need to get these back up before the weekend. Like this is like code red. And I think it's things like that where, look, frankly, I put that on us a little. We need to challenge ourselves, and I challenge our revenue team. How do we do better with, when you have such just astounding value prop like that? It's our failing if we're not on the tip of everyone's tongue on the retail and brand side when they think, how do I make more money? And that was a good example of it, that it took that retail manager saying, hey, our sales just dropped over 60%, for that CEO to say, I better move really quickly on this. And that's a pretty sophisticated CEO. But, so I think, well, where is the value? The other part of it I'd mention is, increasingly, the big things consumers complain about is they want to shop by clinical effect. They want to shop by real-time inventory. That is insanely hard to showcase online. And so even if the business does want to sort of have consumers come to their website and service them, it's way easier to use our e-com embed, which is using kind of that centralized, cleaned data that comes into Weed Maps, than it is trying to just sort of throw up your POS data and say, here you go, like good luck sorting it out.
Yeah. And another feature that's current today that I really like is that my dad, to manage his chronic pain problems, uses a Papa and Barkley tincture every month. And we have 16 stores in the town that I live in. And it would be pretty painful to not only figure out who has that in stock, but also who has the best price on it. So instead, what I do is I just go to that search box, I type in Papa and Barkley 3-to-1 THC rich tincture, and it shows me who has it, and it even shows me the price and saves me a ton of time. Do you want to talk a little bit about that brands feature and how you work with people like Papa and Barkley?
Yeah, so what's funny is I do literally the exact same thing you do for my mom. She loves that 3-to-1 ratio. So I guess, shout out to Papa and Barkley. But so what we did was, and this is like, we invested really heavily in brand data and curation of brand data, because one of the hardest things, and you see it happen on Amazon, on large e-commerce sites everywhere, is it's really hard when you're getting data of what inventory different stores have from different POS and inventory systems. It's really hard to match like product to like product. And so the result of that would be, if you search Papa and Barkley, that 3-to-1, you will see 100 individual results for that 3-to-1. And so what we do from a data viewpoint is we look to have as many products on retailer menus tagged to an individual brand and brand SKU, and then we automatically syndicate the brand's information, their product imagery, their descriptions, their clinical effect information across to those listings. But what that means is, when you click on that brand SKU, that Papa and Barkley, and then you click that 3-to-1, you can then we can index and show you a listing of retailers that carry that product that real time is in stock right now, which ones are online order enabled so you don't have to get off your couch, and then the prices. And we're actually have some cool stuff that's shipping where we're also baking in, and that has strike through pricing, we use discounting, but also we're going to start incorporating into that search, what are deals that would be applicable to that SKU, that so while you're looking, well, maybe there's a deal I can apply to this, or maybe if I add a little more to my cart, I can get, $20 off, or that sort of thing. It's an incredibly valuable feature. And I think it's only, I think the cannabis industry folks would really understand it, because again, you have dozens of items coming in and out of stock on the menu. I mean, I'd say shopping for cannabis is more akin to shopping for goods at a farm market than it is to shopping for alcohol, something where there's almost like infinite supply and it's all shelf stable.
Yeah, that's a great point. And I also found out cannabis people don't want to buy there's some on the medical side, like the Papa and Barkley 3-to-1 THC rich tincture. That's something more a medical user for lack of a better term, I think would go towards. But on the rec side, one of the things that surprised me is people don't want to buy the same stuff over and over again. So they may like a brand, they may like Floracal, and they may like OG Kush, and they may buy that once, but they always want the cool new thing. And I was shocked. I thought somebody would find something that worked and do it over and over again, but there's so many new strains out there, and that's part of the big cannabis marketing, is always evolving that. And so I think Weed Maps is also a good way to keep up with the latest and greatest on that side.
Yeah, that's the other thing is, so when we surveyed folks, over 50% of consumers, cannabis consumers, can't name a favorite brand. That's not to say like they know a bunch of brands and they just haven't chosen their favorite. They quite literally cannot recall and name a cannabis brand. And the thing is if you look at new consumers and old consumers, they're both equally confused because there's just this explosion of new brands, explosion of new form factors. You take just the beverage segment, people are doing, micro bioavailability beverages and like near beer, fake IPA beverages. And it's very confusing for folks. But yeah, the other thing is from a product stickiness viewpoint, consumers really like switching. They really like trying new things. And we see a lot more variability. And part of that is driven by the fact, again, the fact that you don't have sort of any real homogeneity in terms of product availability. So sometimes somebody will order from a place, they've got their cart half filled. Oops, the edible brand I'm used to isn't there. The flower, the concentrate, the shatter, the wax that I like isn't there. Cool, I'll try something else. And then they find that they like it and they go from there. We're actually working on some really cool recommendation and personalization engine stuff. I mean, keep in mind, nobody has more first-party cannabis data than we do. And we're just starting to turn that into both monetizable data insights for brands and retailers, but then also turning into a recommendation engine for consumers. And ideally, we start to inject that into the dispensary where we can help bud tenders solve that, that age-old conundrum, which is somebody comes in and says, I have migraines, what cannabis should I try? And most of the time, the bud tenders frankly have no idea because they don't suffer from migraines, and also their endocannabinoid system is different than that consumer, so they don't really know. So how can we help bridge that gap? Huge pain point for medicinal and adult use or recreational consumers, and something that I think we're in a universe of one of being able to solve.
Let's talk a bit about competition. So certainly if you're, I'm going to focus on the collective side of things. If you're a collective and you're looking to get your name out there and have a technology platform, one option is to do it yourself and build your own website, rely on Google SEO type things. Weed Maps is another excellent option. A third option is Leafly, and Leafly's gotten bigger, doing more things. I think they went public earlier this year. Can you talk about how you're similar or different from Leafly, and where you see the Weed Maps advantage in that equation?
Well, to be honest, with all due respect to Leafly, I think it's a little bit of an apples and oranges comparison. So when you think about the fact that, what Weed Maps is a marketplace, people come there to shop. A large amount of the traffic come to Leafly because it's a content site. A lot of what they focus on is news and strain information. And I think what you see in terms of the transactability or what they drive. And so I think to some degree, it's sort of like comparing Amazon to, I don't know, the New York Google News or the New York Times or something like that. And that there's a lot you're going to learn and find out there, but we're relentlessly focused on integrating with POSs, being able to, bi-directionally push and pull information with them to aid transactability. It is a marketplace surface through and through. And so it's focused on that side of things. I think you see that reflected in the ROAS that we drive, the conversion rate that we drive. So for businesses that are sort of looking to appear more prominently in the site, and this is a hallmark of a good specialty marketplace, our conversion rate for promoted positioning within Weed Maps almost 20%. For Amazon, it's under 10%. And if you look at something like Google Ads, which people also incorrectly analogize us to, that is advertising. That's not being presented in a marketplace. You're looking at a conversion rate that's generally sub 1%. In fact, usually sub 0.5%. And I think that that's the thing, is there's just fundamentally a difference between a specialty marketplace, non-specific advertising, and then content sites. And so I think in that regard, I think while Leafly does have some of those elements, it's just fundamentally a different value proposition because a lot of folks are there to look at news and strain information.
Yeah, where I find the greatest utility for LFLY is if I want to understand a new strain, ice cream cake, tell me who the parents are of ice cream cake, tell me what effects it might be good for. But I've never once, and this isn't throwing shade at LFLY, but I've never once clicked on one of those ads trying to get me to go to a dispensary after looking at ice cream cake flour, for example.
Well, so it's an interesting thing. Just, I'm a geek for how people shop, the data science of cannabis, and just the cannabis in general as a subject matter. And one of the things that's fascinating is, so we have a pretty robust strain database instead of strain information. The thing that's interesting is where you primarily see that is in surfaces where it's aiding the discovery and shopping flow of consumers. So trying to get them from, okay, I'm shopping, and increasingly consumers do want to try and shop by brand or category. Generally, THC or price point are the two highest things, or CBD. But to the extent they're interested in that strain information, is trying to contextualize it of who sells it nearby. We're not trying to sort of be the Encyclopedia Britannica of strains. We're trying to help people who are shopping know what strains are nearby. What's the clinical effect? Is it going to make me sleepy? That sort of thing. If I'm looking at a branded product that uses a brand name versus a strain name, is there a strain that's tied to it? That sort of thing. So trying to keep it within that kind of holistic shopping and discovery funnel. And I think that fundamentally that's required us to take much more of a data first approach. And the other thing is it's really been thinking it through the lens of how does a consumer go through their shopping journey, and where would strain information logically intersect with that shopping journey versus just saying, here's a strain database.
Mm-hmm. Let's talk a bit about how Weedmaps is going to grow moving forward. So certainly in existing markets, you can gain a larger share of those. But I think maybe one of the biggest ways you can grow is when new markets come online, or when medical markets move to adult use, because that expands the potential user base from people with a medical card to anyone over 21 years old. April 1st, I guess 2 days from now, we have New Mexico moving from medical to adult use. Not a huge state, but still something pretty exciting there. Bigger opportunities, we maybe have New Jersey finally rolling out their program, hopefully next month. New York, massive, maybe late 22, sometime in 23. Can you talk, Chris, a little bit about how Weedmaps can grow and which markets you might be most excited about moving forward?
Yeah, so look, our goal is, we put a lot of work. The first thing is to have the products, especially the business products, be available in new markets. There's a fair amount of work, research, and pre-planning that's required to make sure that software is compliant. In Massachusetts, there's different requirements for how delivery is done versus California or Michigan. There's different ways in which you can market, words, terminology you can use. There's strictures on the way deals can be done in Washington that don't exist in Oregon. So as a baseline, first of all, it's sort of knowing the market, knowing what the laws and regs are, and then building towards those. But yeah, look, there's an incredible set of new states opening, a massive amount of opportunity. New Mexico, I think, is going to be an exciting state. We've been actively involved there. I think at this point we have over 80% of the businesses up on Weedmaps now. And in there, I think the thing that's interesting is I think that they're taking a really forward-thinking view to adult use legalization. They're going to have a lot of supply, a lot of different brands, and that sort of thing. I think it will be actually a very robust market. I think, people don't think about it often, but Oklahoma, with 3.8 million people, I would say is one of the strongest cannabis markets in the US, and it's medical only. About 2,700 retailers in the state, almost no problem with an illicit market. And on average, across most legalized states, you have about 80% of all cannabis demand is still met on the illicit market side. Not so in Oklahoma. And part of that is ready availability of dispensaries, so it's not inconvenient to find a licensed shop. But yeah, New York, New Jersey, look, to this day, when Prop 64, which legalized adult use in California, passed, only 15% of cities and counties opted in. And fast forward to today, only about 23% of cities and counties in California are opted in. So California is not the green oasis that people think of it. And I think most estimates are that 70-80% of cannabis demand within California is still met on the illicit market. You look at New York and New Jersey, 50% of cities and counties right off the bat opted in. So that's a huge sort of tailwind. And separately, both of them are looking to, or saying the right things about effectively having unlimited licenses and opening it up sort of widely where there is going to be sufficient access. So I think that'll be really exciting. I think both of them have strong social equity programs. So you're gonna have a lot of net new operators coming in. I think that's an area where we've always been, I think, very strong as a suite of software and compliance solutions that help new business operators, new SMBs get their feet under them and meet the sort of the rigors of compliance in a cost-effective sort of much more simplified fashion. So yeah, great states opening up, tons of opportunity, but that's giving short shrift to the fact that we're seeing in the existing states a huge amount of growth that's on the come. Getting to that other 75% of states and counties in California opening up. We're starting to see movement there. Illinois, due to litigation, has been blocked on issuing hopefully hundreds of new licenses. Feels like we're starting to round the corner there. But most of the licensed cannabis markets, I think the current complexion of them doesn't reflect where we'll see them 5 years from now. I think there'll be a ton of new operators in those jurisdictions that are, net new social equity operators, SMBs, that sort of thing.
Yeah, great point. Because California's had Prop 64 for, I guess we're coming up on 4 years now, but we're been slow rolling out dispensaries. And I think last month in February was the biggest month in terms of new licenses issued. They issued, I think 60 new licenses in California. So that you take a state that is theoretically on the more mature side, but still a bunch of new opportunities.
One of the things that's interesting or that people misunderstand is people say, well, Chris, weed maps must only work in these densely licensed states, or separately it must only work in these limited licensed states. People always people seem to sometimes take that view, and the funny thing is when we think of jurisdictions, yes, we are very careful to make sure that all cannabis demand stays within the same state because of federal rules. But when you look at any state, there's such a wide difference in density. So for instance, you look at like a San Diego County, which has a population that's bigger than a lot of states. There's only several dozen dispensaries in there, extremely low density of retail, which is driving this sort of mind-bogglingly large illicit market down there. And then you go to a place like San Francisco where there's hundreds of dispensaries, with a decent population center, but one that's sort of more geographically spread. And so the model and what we offer works in both scenarios. And I think when we look at new jurisdictions opening at this point, most of the time a new jurisdiction opening, as much as they want to think that they're sort of, creating the new best model or whatever, spiritually we can look at and say, yeah, this is similar to this jurisdiction or that sort of thing. There's not too many people who are coming up with a model at this point that's just, completely different than anything we've seen before if you slice down to the local level.
And I can sense in the investment community, people were pretty excited about your fourth quarter. I follow a bunch of things online, on Twitter especially, and there was a good reaction. I think the stock got some traction. One of the highlights I saw was monthly active users increased to 15.7 million, marking a 57% growth year over year. You also raised guidance above street expectations. You want to talk a little bit, Chris, about what you found most exciting about Q4?
Yeah, I mean, look, I think the big thing is look, at our core, I mentioned it earlier, us being a profitable company. I think, there's been some talk about market turmoil, market disruption, but I think the thing you fundamentally saw is, and this is what I alluded to earlier, the number of people coming to the marketplace continues to grow up and to the right as a factor of time, and consumers overwhelmingly find it easier, simpler, and often cheaper to shop through the central marketplace than they do through other mediums. And so, I think the big sort of thing was a steadiness of growth, regardless of sort of in market turmoil, that was really exciting. And I think the fact that when you look at just our sort of U.S. numbers, because we cut off Canadian revenue at the end of 2020, and so when you look at just the U.S. numbers, which is sort of a better indicator of our growth, we were putting up incredibly gaudy kind of year over year numbers. And yeah, part of that is monthly active users. We saw that growth coming through. Paying clients, we saw 27% growth from Q4 of 2020. And then, yeah, I think pointing to on the forward side, I use the phrase in times like these, the strong get stronger. And so we basically chunked about $30 million and earmarked it for sort of high growth, really exciting, strong ROI opportunities for 2023 and beyond that we can invest in now, because we have that luxury of sort of such outsized revenue growth. But yeah, ending Q4 with 54 million in revenue, that beat the high end of guidance by 2 million, and it beat consensus guidance by about 3 million. So it was strong by any measure.
And my final question to wrap up on is that with cannabis investors, many of them I feel are here for a series of catalysts. And this is maybe a bit more true on the plant touching side, but I think it applies broadly to the business. So take, for example, something like safe banking, which there's some potential that may get passed this year. Another example would be decriminalization or federal legalization, maybe something like descheduling, or all things that were, Biden campaign promises we hope might come through during his tenure. Can you talk, Chris, about how something like safe banking and ultimately decriminalization or legalization may benefit Weedmaps?
Yeah, I mean, look, the simplest thing is there's a funny analogy where I think to some degree kind of our revenue growth has this sort of iceberg element to it, where sort of like 80% of it is below the waterline. In this case, the waterline is federal legalization. So we have a marketplace where we do several $1 billion in transactions, and we charge exactly $0 of take rate or transaction fees because of federal prohibition. We don't put payment rails, nor do we feel legally comfortable putting payment rails within that. So it's all sort of charge on delivery. And so safe banking, federal legalization, potentially there's other avenues, have a high probability of opening the door of being able to do that and sort of being able to put sort of a market standard kind of marketplace take rate on transactions that come through. But more than that, I think there's a lot of exciting things we could do in sort of helping businesses sort of scale more effectively in terms of providing them with, better data, or, for instance, helping them deal with sort of brand management across state lines. That when you have federal legalization and you have interstate commerce, these power solutions can really kind of blossom and stretch their wings. But right now, when you have these sort of limited state by state vertically integrated operations, look, technology thrives on solving complexity. And the complexity, while it's insanely high for cannabis, higher than almost any other consumer good I can think of, it's not as complex as it's going to be when federal legalization opens, and you have to sort of retest and move products across state lines when brands sort of from one state to another need to educate consumers on what that brand is because they've never heard of a California brand in Oklahoma or that sort of thing. And so, well, yes, sort of federal legalization opening the option of payments is huge. I think it opening up a more robust ecosystem over which our software goes is sort of a bigger macro opportunity that I think a lot of people sort of miss in kind of focusing on point things like safe banking or this or that. And so, I think while yes, there are big catalysts on the come for us with federal legalization. Now, I'd argue, look, we're guiding towards mid 30% growth this year. I'd say we're kind of making the catalyst happen on our own, even absent federal legalization. And I think when you look at sort of our profile of revenue growth and profitability and sort of the size of the TAM and the fact that there's all these net new markets opening that didn't exist before, I kind of chuckle and say I challenge folks to show me another high growth software company that has all those things going for it.
Well, this has been fantastic, Chris. It's a really exciting story. It was great to learn more, and I wish you best of luck moving forward.
Oh, thanks so much. I appreciate it.